So welcome back to another Beating Alpha episode. This is episode 117, and we have a very special guest. His name is Jason Balara. So a little bit of background of Jason and what the things that he's working on. So he's the CEO and co-founder of Lark Capital Group, where they are upcoming real estate investment firm focusing on multifamily syndication, both active and passive. His primary career path has been a veterinary surgeon, and his goal is to help veterinarians and other medical professionals to gain financial freedom. And if you want to get in contact with this man, I definitely recommend to talk about that financial freedom and how we can have that through passive or multifamily investing. Make sure to get in contact with him on Instagram. That's Lark Capital. Website is of course larkcapital.com, or email, which is going to be included down below in the comment section too. So Jason, I just want to say a big thank you today for being on the show.
Yeah, thank you for having me. I really appreciate you having me on.
Thank you.
Looking forward to our discussion.
Yes, definitely. I mean, a lot of people probably looking forward to that because of the catchy title that they came across on the YouTube channel. That was like, oh, we have to check this out. And that, it's very like, I wanted to kind of check it out, your personal background, and kind of, because the stories, I love the stories. They're very powerful. And I mean, we kind of spoke before the interview started, about your background. So I would love if you can share that to the audience. Like, first of all, maybe if we can cover the veterinary surgeon, like, how did you decide that you need to follow that passion, that kind of thing? And I mean, did you have a clinic or you kind of work for somebody? Can you give a little bit of story of it?
Yeah. So, I mean, I feel like a lot of veterinarians have the same sort of, oh, I loved animals as a kid, kind of, a lot of kids say I want to be a veterinarian. And for me, it just never went away. It's interesting because I always also had an interest in construction and houses and things like that, always on the single family side. But as I was kind of working my way through college and veterinary school, I did a lot of work in construction. I worked for an electrician. I worked for several contractors. So I can build my own house, which is a helpful thing to have. I kind of can go from scratch to a standing house, which is nice. But ultimately, I'm originally from Boston, and sort of what steered me towards veterinary medicine rather than construction is just the weather. So it gets real cold, it's real nasty in the winter, and I didn't want to be outside all the time, and that's kind of what it felt like. So I did stick with veterinary medicine. As I went through veterinary school, it became clear to me pretty quickly that I wanted to specialize, and I was very drawn to doing surgery. Probably a large part because of my construction background. I like working with my hands. I like being faced with something that's sort of broken and then fixing it. And so, the program to get to be a veterinary surgeon, it takes 4 years of vet school. It takes another 4 years of internship and then residency of specialty training. So it's a long time, to sort of dedicate, which will probably make a lot of people wonder, well, why the switch now? And it's not a switch completely, but we'll probably get to that. But yeah, so I ultimately just decided that, surgery was my calling within veterinary medicine. I always tell people, my family and friends will call me and ask me about their dog and cat. And I'll say, if your dog has a broken leg, I'm definitely the guy you want. If you want to know about the vaccines and things like that, it's just not me anymore. I'm beyond that. I'm very specialized in surgery.
Okay, got it. So, I mean, why leave it here? Let's talk about the transition, Let's talk about, How did you came across the thought? Maybe there was some sort of a person or maybe event that kind of influenced you or gave some clues that I need to follow, kind of transition into real estate a little bit more.
Yeah, so a couple things happened. We're talking here in 2020. It's been a big year for a lot of reasons, but certainly the pandemic is at forefront. I think what I realized was, as a veterinary surgeon, I could make money. I can make very good money. I live in California now, which I don't know if the listeners will be familiar with what a non-compete state means, but basically means I can work for whoever I want, whenever I want. And I've been able to really kind of use that to my advantage over the last couple of years, where I have a regular W-2 job. I started my own business on the side, and I've even picked up shifts at other clinics, essentially to try and we did our house renovation, accumulate some capital so that I could start investing in real estate. My idea though with that was I was going to flip houses. I knew California was too expensive to buy rentals really to have them cash flow. So I was going to buy houses, renovate them, and then sell them. And I'm not against that. I think flipping is a fantastic way to go. But what I realized was essentially I was getting myself another job, and I already have enough jobs. And so I kind of thought, okay, what do I do here to get more time? And a big part of that was my son being born. I wanted to see him grow up. I wanted to spend more time with him. The other part of it, like I mentioned, was the pandemic. And what I saw was, a lot of people lost their jobs in all industries. In the veterinary field, we're considered essential workers. So we didn't lose our jobs, but there was a period of time where we didn't know if we were going to have any business. And so I saw some of my colleagues who were maybe closer to retirement getting really panicked about, okay, what if we cut our days back? What if we actually worked a little bit less? And some of them thinking that they just couldn't do it. And so it really hit me. I don't want that to be me in another however many years that would be, 10, 20, whatever it is. I don't ever want to think if I don't work, I'm in big trouble. And so what I realized was flipping wasn't going to really do that for me. And I started, of course, Bigger Pockets is a big influence for everybody. I started listening to a lot of podcasts, and I happened to come across a couple of the multifamily podcasts. And I thought, wow, that actually really sounds like the way to go. That's the way to scale. I had already started talking to a friend of mine who used to work in the veterinary field and became a real estate agent. I started talking to her about potentially investing in single family houses. She lives in Atlanta now. And so I was going to invest in single family houses, kind of get a long distance team, and probably burr those houses so that I had rentals going on over there. And as I looked at it, it's like, okay, I could buy probably a fair number of single family houses in a year. But really, if you just start looking at the numbers, it's just not comparable. You can't, even if you're one of the top single family investors and you're buying, say, even 100 houses in a year, well, what if I buy one multifamily that has 100 units? And it's like easier to have someone else manage it for me. So the long distance thing makes more sense. It kind of all started to come together. And realistically, syndication wasn't something I maybe knew about it actually from a sports standpoint, in terms of people buying sports teams as a group, but I didn't know about it. I didn't know that's how people bought, apartment complexes. So that was kind of my mindset, how I had to shift everything into, okay, multifamily is the way to go. And you can still have a significant impact on helping other people. And, at the same time, sort of, at first, I know it's going to take more time, but once the systems are established and in place, it's going to give me more time to spend with my family, which is ultimately what I want, and really what I want for our investors. That is our mantra, if you will.
Okay, so talking about taking time, like part of the business is, especially for people who are getting started, is kind of educating yourself about the
Yep.
syndication and the way it works, because there's a lot of different moving pieces in the business. So maybe you can talk about, like, what have you done, like, personally when it comes to education?
Yeah. So I started just by reading like crazy. I mean, I started with audio books probably even a couple of years ago. I started with audio books. What I realized is the audio books were great, except for I was listening to them while I was driving, maybe not paying attention as much as I would like. And also I started feeling like I was listening to some of them over and over again because I wanted to pick up certain points. But I realized if I have the actual book, I can mark it, I can get back to it easily. So I don't know, maybe that's old school thinking of me, but I just thought having the book in my hand, and coming from a background in veterinary medicine, I sure have done a lot of studying in books. So it's kind of like, I know how to do that. And so I could get my information from there. So I did a lot of reading. Like I said, I kind of got into the podcast heavy. So now when I drive, I mean, it's funny because I love music. I mean, that's a big important part of my life, but I only listen to podcasts in the car now. It's really, if the music's on, I'm like, I need to learn something. So I feel like I've had to figure out how to be more efficient with my time. And so if I'm in the car and I'm away from my family, and really you can't generate income while you're driving somewhere, right? So it's kind of like, okay, I'll learn something. So I listen to the podcast. I've been listening to your podcast. I listen to a lot of them just to gain as much information as I can. And I hired a mentor. So I thought, I'm someone who already has a lot of work, right? So time is the one piece I'm missing. And so it's kind of like, I've heard the saying, either, you might have to pay to play, essentially. So hiring a mentor helps you get some of that. I don't know that every person needs a mentor, right? Like if I was 20, 25 and I didn't have, a paid job and a family to take care of, maybe I just go work for someone else who's already syndicating and, work for little to no money and do it. But I had to kind of come in the other way, leverage other people's experiences.
Yeah.
And also, I mean, everybody says network. It's a little bit hard to do that right now where you can't actually meet with anyone in person. So it's kind of like, if I can have a mentor that has connections, that will help me with the networking side of things. And I'm doing virtual meetings, but you can only talk to so many people at a time that way.
Definitely agree with that. So I love the fact what you mentioned about the books, and you kind of more maybe visual / kinesthetic type of person who loves to kind of have something in front of them, and that's the way you consume information, which is great. It's one great way to do that. And again, there's a lot of different options for people who are looking to get involved. Again, the audiobooks, the ebooks, the physical books, the podcasts, for a lot of free resources, paid resources. So maybe, again, if it's not too much to ask, maybe we can give people kind of, top 3 books on like real estate investing or maybe syndication, specifically
Sure.
that you read before.
Yeah, absolutely. I mean, I've read so many. I would say for me, because I am sort of in the beginning, I guess I would say probably the book that got me started on this is not actually a multifamily or syndication book. It's long distance real estate investing by David Green. And the reason was because, like I said, I started thinking I was going to do single family, but I didn't. I wanted to have, aside from flipping, I wanted to have rentals, and I knew I didn't think that was a good idea to do where I live. So reading that book, that's one of the ones that I listened to probably 3 times. And then I was like, I need to have this in my hand so I can go back and take notes and all of this. So I went through that book over and over again. So that was a big part of my start. I would say, as far as the syndication books, Joe Fairless's book, Best Ever Guide to Syndication, is a great one. It's just very step-by-step. It really tells you, this is what you need to do. If you follow these steps, this will happen for you. And so I think that's a really good one. Michael Blanc's book, because it was one of the first ones I read, was actually very helpful for me too. And then other books, like I'm a big fan of Malcolm Gladwell. So, and Outliers is a big one for me. I just always like that 10,000 hours theory. It's like, because I come from I don't come from money. And so I come from a background of, if I work hard enough, I can make it happen, no matter what it is. I mean, it's been that way for me with jobs, with sports, with whatever it is. It's like, okay, well, I'll just outwork the next guy and I'll get there. And so that 10,000 hours thing really resonates for me. And it's like, I'm well past that in veterinary surgery. And it's like, so now I'm teaching people how to do surgery, right? So it's kind of like, now I can take all those techniques that I've used to get to that point in surgery. And I feel like if I can teach people how to do surgery, I probably can also get to the point where I may be able to provide some value and knowledge in the syndication space as well. That gives me a little bit of confidence that I know how to learn things and implement them.
Yeah. And so, talking about the Malcolm Gladwell, and again, the Outliers, the book, definitely recommend for somebody to read it if you never read before. So the 10,000 hours, kind of the mastery part of anything, right? But at the same time, I think there's another kind of half of the stories is if you read the book, The Tipping Point, by Malcolm Gladwell. It's called The Tipping Point. So there is that involved in business too. Maybe you don't need the 10,000 hours to kind of make things happen. There's this like a threshold. Things will start happening. So, and I love the fact that again you're pushing yourself a lot. So I want to come back to that point that you mentioned. You're sitting in a car and instead of listening to the music, you're forcing kind of yourself to listen to this audio books and learn about multifamily syndication. So can you talk about, and again, I do understand part of that is your family and having a strong why, but how do you how do you transition? Because we're talking about, veterinary, being a veterinary surgeon and now real estate business, which is a little bit, different.
It's different, yeah.
Yeah. So how do you actually how do you get in that mindset and how do you kind of force yourself on a day-to-day basis to shift that mindset?
Well, I think it's like, I think you just mentioned it too. It really comes down to your why. And that's one of the things that has really resonated with me. And in almost all the books, all the podcasts, one of the things that people will mention is you have to have a strong why to really motivate you. And that's actually been, you reached out to me through Instagram. So I'm sure you saw all over my Instagram page, it's know your why. And I really, really feel strongly about that because my why was born just over a year and a half ago, right? I was always interested in real estate. This is not new to me in terms of liking real estate. I've always loved construction. I have a garage full of tools, right? So this stuff it's not new to me in that sense. What's new to me is I had to figure out how to make it not take up all my time. And so, I have a great supportive wife. She's willing to take care of my son most of the time while I'm working and things like that. But it's like, even though she's willing, I don't want her to have to do that. And also I want to be there. I like spending time with them. So it's kind of like all of a sudden I realized I need to do something because working 6 and 7 days a week that's not conducive to spending time with my son, right? Like we aren't born with an infinite amount of time to do whatever we want. So it wasn't actually very hard to shift my mindset. My mindset of working hard that wasn't a shift. I've had that. So the mindset is just working hard in a different space. And I think that, so when you say, forcing myself to listen to the podcasts, I didn't have to force very hard. I enjoy it. It's interesting to me, right? So it's like, cool, I can listen to someone and whatever I can learn. And I tell this to my so I train residents in surgery. I tell them this all the time. Listen, you don't have to do everything the way that I do, but you have to know how I do it and know why you do or don't like it, right? So my goal then is to use that. Now I can take that from my mentor, from all the other syndicators that I listen to, read their books and whatever. I don't have to do everything like my mentor. I don't have to do everything like Joe Fairless. I just have to do everything the way that's going to work for me. And being able to pick and choose from different people's systems is fantastic, right? These people are already successful, so I'll just do what they're doing at whatever point makes sense for me. So it's kind of like the mindset. I don't know. It didn't feel that hard to change, right? Because I want it. Right. And I know why I want it. So it's kind of like, here I am, this is happening. It's probably not going to happen as fast as I want it to, because I'm not a patient person when it comes to that, because I'm always like, well, if I work harder, I'll make this happen. But the fact is that's probably my biggest mindset shift, is that it's not just about working harder, right? I'm not constructing a house, right? It's the relationships and things like that. And just, yes, I have to work hard at building the relationships, but just it's a team sport, basically, I think is what it comes down to. So figuring out how to, one of the things right now I'm trying to figure out is, okay, who do I want to hire, whether that's a virtual assistant or a full-time person on my team? Where do I want, where can I allocate those resources the best? So that, to me, that's probably the next step in my evolution here with the business is figuring out what do I want to do. Like I said, that, you know, we've got the website. We now, I just started literally 2 days ago, a Facebook page for the business. So people can go there. There's really nothing but the picture of the logo, but there will be things there. So I need to really develop all of that.
Yeah.
So that's, I mean, I think, yeah, it's the mindset is figuring out how to use a team is probably going to be the biggest challenge for me.
Yeah. Okay. So I love the fact that you mentioned that, and I do agree with you on that 120% or 1,000%. Pick a number, you know, unlimited amount of percents, because like the work ethic, that's where the part that is going to differentiate somebody who is going to be good, great, okay,
Right.
you know, because you cannot install that. I mean, there's unlimited information available, as we spoke about, you know, the books, the audiobooks, ebooks, all of that, YouTube, free content. You can go and do that and kind of learn, and you know yourself. There's a lot of people, and I came across a few myself, that are just studying all the time but not taking action. But if you have the work ethic, which is kind of the key piece, you know, while building any business, I mean, you're going to be fine. So, you know, that's what it is. So one thing that I wanted to talk about, again, as I mentioned, just hiring people and kind of what's happening in a family. You have the wife and a kid, you know, and you know, working and having different things in your life. So can you talk about maybe some tips and strategies when it comes to the time management?
Yeah. I mean, well, we already touched about, you know, using what time you have as efficiently as possible, right? So one of the things I had to change, so exercise is very important to me, right? So that's a big part. You know, you have to have balance in life. So exercise, this is just an example, but exercise is a big part of me. Throughout my life, I always said, I can't work out in the morning. I just don't feel ready for it. So I would go afternoon or after work or something like that. Well, guess who goes to the gym in the morning now? Because my son's still asleep. And what I can do is set my alarm earlier and go get that part done with my day. And I realized that it's actually great. I feel good. It makes the rest of the day feel better. You know, listening to the podcasts in the car, that's another, you know, time management thing. I think that is probably something that I struggle with in terms of, I think maybe the best time management thing I'm going to have to work on is saying no, right? So it's like, I mentioned I pick up shifts at other clinics. Those other clinics are still asking me to pick up shifts. And it's like nice to be wanted and appreciated. But at the same time, at one point it was good because I was like, okay, I'm bringing in extra money. But now I actually have thought about it and done the math. And it's like, probably, even though I've made quite a bit of money doing those extra shifts, if I was able to close one good sized deal, it's probably going to make up for that money, right? Or maybe more. It's because it's going to kickstart everything out. So it's like, once I realize what's important about time use, that's the way to do it. I think I'm still figuring out the strategies. So, I mean, that's, if you have any ideas, I'm open to them, but it's one of those things that you really do have to, I think, just plan out your day and say, this is when I'm going to fit these things in. And important that part of that plan involves spending time with my family.
Here you go. Here you go. So on that note, if you guys and girls are watching this and you have any time management kind of related tips or strategies, make sure to comment them below or get in contact with Jason himself on Instagram and drop that knowledge in. So maybe he can apply something in a personal life. So yeah, I do understand it's you know, it's a kind of difficult thing, but look, you're making things happen. So that's what's the most important. Can you tell the story again? Because I know you're part of the, as I mentioned, you're part of the 500 unit deal and as a limited partner. So can you talk about how did you came across that deal?
So actually, it's through my mentor. So it was that's kind of how I found out about it. So my initial, everybody has the, you know, the limiting beliefs and things like that. Your initial fears when you're starting all of this, and it's like, oh, I don't have enough money. For me, it was like, I don't have enough money yet. I'm too old now, that kind of thing. Like, but everybody has their thing. What's holding them back, right? So it was kind of like, we formed the business. I have a business partner. He's more of a capital partner. He doesn't really want to do any of the work, but he's a very good friend. He also makes good money. So it was helpful to pool our capital. And so I got, we did this, we formed the business, we set up our business bank account, and then it was like, okay, now we have a bunch of money sitting here. Let's do something with it, right? Because you're not getting hardly anything out of sitting it in a savings or a checking account. And so it's like, okay, let's start putting it in some of these other deals, other people's deals. It just so happened that the one I liked sort of first was through my mentor, but we're looking at others as well. And so I think that'll be part of our strategy, part of our company strategy is we'll do it on both sides. We'll be GP and LP. And so it was kind of, it's a large deal. It's a $80 million, I think it's 498 units. So it's a large deal in a great market. It's in Marietta, just outside of Atlanta. So it's where I'm kind of looking anyway. So it just, all of the pieces kind of fit. It's very conservatively underwritten. So I'm really excited about it. And I think we should see good returns on it. So it's a good way to grow our capital while we're also trying to do it, on the GP side. And I think it's also good experience. I mean, just getting to read through a PPM very closely, I think I even gained knowledge from that. So it's just, I think everything you can do, whether it benefits you financially or from a knowledge standpoint, is going to help.
Okay, so you mentioned that you're still looking for kind of deals. So when it comes to investing as an LP, passively. So can you talk about a little bit more and what you're currently looking for and what actually makes a good deal? And I think that your answer is going to be beneficial for people who are looking to invest passively. I mean, is it the IRR? Is it the equity multiple? Is it the operators? Is it location? Can you talk about some of the
Yeah. So I mean, I think everybody's strategy is a little bit different, right? So all of those things could be important. I think it's probably cliche to say it, but probably what matters the most is the operator, right? So do you trust them? Do you know them? Do you trust them? Is it someone who has a track record? And I say that as someone who doesn't really have a track record that hopes to someday have investors. And I think that will happen probably through joint ventures. So that's usually, I think, what I'm learning the way that people get started. As I said, it's a team sport. But I think what I'm looking for on the LP side is probably a little bit different than what I'm looking for on the GP side, right? So on the LP side, I think I want to diversify a little bit more. I'm very interested in opportunity zones. I think that the tax benefits there can be tremendous, especially with a 10-year hold. I've invested in the stock market with some pretty good success, but as I'm sure you know, you can't get that money, right? Unless you pay a bunch of taxes, you can't get that money out. So what I'd actually like to do is take some of my money out of the stock market and put it into an opportunity zone. And so then you don't have to pay any capital gains tax if that hold period is more than 10 years. So maybe that's getting a little bit off topic, but I think opportunity zones are a big part of it. I really like the idea of new development. It's not our strategy for the GP side. We're not yet anyway. On the GP side, we're looking at B and C class value add deals. But on the LP side, I would also be interested in some A class new development type things in good areas, in good markets.
So I just want to ask you a question about the stock market. Have you invested recently in the stock market, or that was kind of long ago? So
I started, a little bit of a funny story to this. My retirement plan, I'm 45. My retirement plan until I was 40 was don't retire, just keep working. That was literally the only plan I had. I thought I would do real estate in the form of flips and things like that, but really just for the money, not necessarily thinking of it as a retirement standpoint. Again, another mindset shift that has happened with having a son is like, oh, maybe I don't want to work this way forever. But so what I started with really was stock market. One of our house flips, we made some money. I decided I'm just going to put that in the stock market, not having done it before. And so I just did, again, as much reading, as much research as I could about it. and I sort of adopted my own. It's not unique to me, but my own technique or approach, in that I was going to buy good companies that I believed in the long term, and then I also tried to invest in mostly Chinese companies that were mimicking those good American companies. Like, for example, Tesla is their stock is huge this year, right? I regret never having bought any Tesla stock. However, I bought NIO stock, which is China's Tesla, basically. And so I thought, okay, look, and at the time, NIO stock was like a few dollars, and I have like some ridiculous return on that particular stock, which is great. I'm happy about it. But the point is, I that's kind of how I got into it. I don't really believe in, like, I don't love mutual funds and things like that, because I feel like I'm just paying someone else to manage my money. And it's like I have a 401k through work, and my returns are very low. I think it's like 2% or 2.5%. And that's with paying someone who's professional to do this. And I guess maybe I'd rather take a little more risk and get higher returns at this point.
Yeah, exactly. Okay. Oh, yeah, the stock market is completely different topic, and there's a different podcast episode just for that itself.
Right.
But yeah, so talking about the current deals, and I mean, what you're currently looking for, because you mentioned kind of the assets like criteria a little bit, but if we can go like a little bit more in depth, and can you talk first of all about the states that you're looking for to invest?
Sure. Yeah. Mainly focused on the Southeast. I think I mentioned in large part just because I know some people in Atlanta. So I think having someone, I know that not everybody necessarily needs to know someone in the market that they're looking. And I don't know that I will in the long term, but to me at this point, comfort level, it'd be nice to be able to, call my friend and say, more from a neighborhood standpoint, hey, would you live here with your family, kind of thing? Is that, you can look at the class that's listed on the OM, but I think without having someone drive by it, I think it's a little bit hard for me to be comfortable with it. But so mostly in Atlanta and the suburbs of Atlanta, but the Southeast, I think, would anywhere kind of Carolinas down to Florida would be good. My wife is from North Carolina. We lived in South Carolina for a while. So I have people in that area, so I would feel comfortable with the Carolinas as well. Looking for probably, in terms of unit size, 100 to 250 units, basically trying to keep the limit at the bottom around 100, just to benefit from property management and having on-site property management. I think I spoke with some property management companies, and they say that really the economies of scale begin at about 100 units. And so it's kind of like, okay, if you're looking at this to scale, do I go buy, 5 20-unit apartments or whatever, however that breaks down, or just wait till we can find the right deal that's 100 or 150 units? And I think that just all comes down to me being patient, which, like I said, is not my strong point. You can ask my wife; she will definitely support that is not my specialty. But I think in this case, it has to be. You have to find the right deal, because you really, again, like they say, you make your money when you buy it, so you have to buy it right.
Got it. So talking about the deal sourcing, can you talk about maybe some ways that you're, like what's currently happening in the pipeline? I mean, maybe a number of deals that you're looking at. Can you talk about that, like on a day-to-day basis? And, because you know yourself, a lot of syndicators, they go about where they build a relationship with the local realtors, real estate agents in those markets. But have you tried some maybe a little bit more creative strategies? I mean, can you talk about the deal sourcing process a little bit?
Yeah. So, I mean, I probably don't have anything creative at this point. I really am trying to form relationships with brokers in the area. I think that although starting a real estate business in the middle of a pandemic is definitely challenging, I've run into some very weird challenges you wouldn't expect. Like starting a bank account was incredibly hard for who knows what reason. But I think what's maybe nice about it right now is that people are nervous about, are people going to keep buying, right? There's still some, although deals are still happening, I think there's some trepidation. And so it's actually maybe a little bit easier for me to connect with brokers as a beginner than it would have been like a year ago. And I'm sure having a mentor is helpful, because I can, sort of use that as part of my pitch. But I think that it's, for a while, especially, maybe in June, July, before things started to seem like maybe they were getting a little bit better, there weren't a lot of deals happening. People were pulling out. And so it was like, okay, the brokers want to talk to whoever might be able to close a deal here coming up. So that maybe works to my advantage a little bit in the timing of it. But I think it's just being persistent and following. That's one of the things where it's like, there are some pretty good systems in place that other people have described. It's like, make sure you talk to them, follow up. Because of the pandemic, I haven't been out to walk properties, but I'm looking at flights to do that, just because I want to get more familiar with the area. So it's a work in progress for sure. I think for me right now, I'm going to probably stick with the tried and true in terms of getting a deal flow. There's once you connect with them, they put you on their mailing list. I mean, I get emailed properties all the time. Many of them are not in my criteria, which is fine, because it's still good for me to look at them. It helps me learn the value of each deal the more I analyze. So it's kind of, I'm happy to see as many as I can.
Here you go. So talking about taking those flights and, the book that you read before, you mentioned about the long distance investing.
Yep.
Yeah. Is that what you're going to do in the future? You're going to be a long distance investor, or are you still planning to move to California, kind of closer to these states?
Good question. So, I mean, I like living in California. It's great. The weather's perfect. I mean, but the cost of living is high. There's a lot of traffic. There's definitely some negatives. Right now, I'm happy to be here. I think, though, both of our families are on the East Coast. So I'm from Boston. My wife's from Charlotte, North Carolina. So I think in the long-term picture, we probably will end up back that way. I don't think that will have necessarily any impact on where I would invest, because like I would also look at Texas and things like that. We lived in Houston for a few years. That's a great city. We've talked about even moving back there someday. So it's just kind of, right now we're here, things are good. We have, we really just finished renovating our house maybe a few months ago. So it's kind of like, let's live here, enjoy this. Our son was born here. Like, we have a lot of connections now. So it's kind of, maybe in the long run, to be closer to family, we'll head back that way. But I think I don't think that will impact my investing, what markets I would invest in. I mean, what I would love to have happen is maybe the market turns down a little bit here and I can get some investments here too, a little closer to me, but we'll see. I get, everything's cyclical.
Okay. So investing in California, that's a different podcast topic too, I think, because there's a lot of people that going against or going for California. And again, I spoke with, a few people, myself, who are investing actively in California or doing developments in California, very big projects. So, I mean, things are still happening regardless, all the fires and all the economy downturns and everything. So,
no, and I think California would be a great market to invest in if I were doing developments, I think, or flipping. And I think it's hard to find something to buy that you can cash flow right off the bat. So it's, for me, maybe it's a stepwise thing. I think if we can get some cash flowing assets going, and then we maybe start doing some bigger projects here, like flips or even development, that we can take those proceeds and either, kind of build them up, 1031 exchange, whatever the case may be, or we take that money and put it into more rentals, however that might work out. But I think I definitely am not advocating against California in any way. There's construction all over the place. It's happening. I think it's probably a hard market to sort of get your start when it comes to multifamily.
Yeah, yeah.
Maybe small multifamily.
Yeah. Okay. So kind of have a kind of last two questions. First question that I wanted to ask is, as we spoke before, kind of multifamily is a team sport. So maybe you can give some advice on vetting potential partners. And I'm sure you have a great one. So can you talk about that process a little bit?
Yeah, I think, and honestly, I think my process on this probably applies exactly to how I would hire people as well, just part of the team. I think first and foremost, it needs to be someone that you get along with, right? So if you're going to work, especially with a partner, if you're going to work closely with them, you have to be able to communicate and really have, maybe not, you don't want to have all the same personality traits because you want to balance each other and have, it's like me and my wife. I'm the dreamer. She sometimes has to bring me back down to earth, but she's realizing that my dreams get us things. So it's kind of, you need the balance, but you need to get along and you need to be able to communicate. And I feel, like I said, the same way. If I was hiring someone, I would much rather hire someone that maybe I see their work in a different field even. And I can say, I mean, I see people in the veterinary field that I think to myself, okay, someday I'm bringing that person on board to Lark Capital because I see their work ethic, I see their organization, or I see whatever quality it is about them that would fit where I'm thinking of for them, right? Like, I don't know, for example, underwriting. I see someone who's excellent with numbers and attention to detail and things like that. I can teach you. I don't even have to teach you. There's a million underwriting models out there that you can get for free. There's books on it. There's all this stuff, right? So I need to look at your underwriting and making sure we're thinking of it the same way. But I think I could easily have someone and teach them how to do that if we're on the same page as far as building a business. So I would be the same way with a partner, really, anyone.
Yeah. Got it. Okay. So that's I love the answer. So can we talk about, again, Lark Capital Group, and like when we're talking about AUM, like is there a specific number or maybe a target that you're planning to accomplish this year, or you kind of forgot about 2020 and you were like focusing on 2021 efforts? Like,
yeah. So, I mean, this year has been several months of mindset shift for me, right? So it's funny you mentioned that, the goal setting. So my wife and I decided, I forget if it was June or July 1st, but we sat down and we're like, we're going to have a goal setting date night. We can't go anywhere. We're just going to sit here after our son goes to bed and talk about what we want to do this year, right? And so at the time, I really was still thinking I had a single family sort of mindset at that point. And so I said, it was like, okay, it was going to be 6 months till the new year. I was like, buy at least one property. That was what I had on there. And then I had in a year, maybe I said, I think we did a 6 month, a 3 year, and a 5 year. And I said, one property, 50 units, 100 units for 3 year and 5 year. Now in my mind, I think probably this year is probably going to be over before, even if we came across a deal this week, it might be hard to get it closed by the end of the year, just the way that the timing of everything works. If we did, great. But now in my mind for next year, I would say I want to get 250 units under management at least per year, right? And so probably once we do that in 1 year, hopefully it's in the first year, my goal will go up. Ultimately, because that's just how my mind works. It's like, okay, we did that. Let's see what we can do even bigger than that, right? So it's kind of, I think I need to set realistic goals, but I think that's a realistic goal. I think, many operators are closing 3 and 4 deals in a year or more. So I think, 250 units is one or two deals next year. So I feel like that's a pretty good goal and reachable goal next year. I haven't yet necessarily thought of a goal on the LP side. I think ultimately, it probably will sit down around first of the year again and do goal setting, sort of a goal setting with my wife, and probably I'll do a goal setting with my partner just to say, okay, this is what we want to do this year for our business. And so, on that, it's like, I think we need to hire some people, whether they're virtual assistants or what. I think we need to kind of divide up the workload a little bit so that, I can focus on the aspects that I'm good at, or the aspects maybe that are just most important, whether I'm good at them or not, I need to get good at them. So that's kind of how I see the next year from now going. I think 2020 has been tough in terms of networking. That's probably been what's been, it's like a year ago, I could have gone to many meetups around LA. Were lots of them happening, and could have gone to conferences and things like that. Now it's like everything will be online for probably, I'm guessing, at least another 6 months to a year, maybe. Who knows, but we'll see.
Yeah. Hopefully not forever.
Yeah, no, hopefully not forever. I want to start a podcast. I think that will be, I listen to podcasts like yours. I listen to, I actually maybe gravitate to some of the newer ones, in part because I'm new, but there's some that are really great. I don't know if you've listened to the Multifamily Takeoff, 3 guys down in San Diego. I think they do a great job. I think their questions are and yours too, it really feels like you and they are listening and like actually taking that information and saying, oh, wow, based on what you said, here's my next question, rather than, there are some podcasts that feel like they're scripted. And it's like, I know you have to have some questions, but at the same time, it's nice for it to be an organic conversation.
Yeah, exactly. And that's what it is. We're just buddies. We're just having conversation.
Yeah, it's just fun to talk. Exactly. It's like, it should be people, we have similar interests. We want to talk about this stuff. It's fun to talk about. I enjoy it. So it's like, why should it be necessarily a scripted thing? I think there's certainly some good to have some questions that you ask of everyone, but I think it's really pretty cool the way that you're able to just, play off of people very well. And like I said, I think those guys with Multifamily Takeoff do a great job with it too. And I know they're pretty new to the game as well. And it's cool. I like listening to them a lot.
Yeah, well, they have an advantage over me because the English is their first language.
You're doing fine. You're doing fine. There's no issue in talking to you or listening to your podcast as far as your
There you go. That's awesome. Appreciate it. Thank you, Jason. I love the fact that you're transitioning, and that transition for you seems very easy. And again, just coming back to the point what you said, it's the work ethic and, willingness to provide for your family and for the limited partners going to be investing in deals. And just one thing that I want to ask you guys, as always, if you share this episode, so potentially best case scenario with a person who's looking to invest passively, or maybe with someone who already has in a range of 250 units and they're planning to sell off the deal, so we can help Jason to reach his personal goals. That would be awesome. But Jason, really appreciate you being today on the show. It's been a pleasure to get to know you, and I wish you nothing but just a lot of success, and I'm sure you're going to make things happen very soon. So
thank you so much. I really appreciate you having me on. It's been great.
Thank you. So again, thank you guys for watching this episode. Make sure to share this episode with a friend of yours. And as always, I will see you on the next episode.